All right, guys, welcome back. I'm going to do the channel. Today, we will be talking about SMCI, also known as smart money concept, also known as price action, also known as ICT. So you guys get it right. It's just a name of this sequence of price action. Pretty much, it's just pretty much price action. Just people just give all this fancy name to it. I break it down, try to simplify it so you understand what it is, how to trade from it, all that. Plus, I'll include trendline strategy that a lot of people like to use trendline too. Without doubt, let's head into it. So this is a chart of MNQ. We're looking at a 5-minute chart. You can go lower to a 1 minute, but it's just more noise. That's all it is, more noise, right? Some people like to use the 1 minute. I do for entry, but other than that, you really don't need to. You can stick with the 5-minute chart. For today's example, this is yesterday's close, which is Friday. And right now, we clearly have some level to mark out. This is pre-market high, pre-market low, right? Pre-market high, pre-market low. This came out some, I think 5:30-ish, maybe. No, before that. That's my son in the background. Um, so we have some extreme high and extreme low pre-market. We mark that level. Once market opens, we can see that 6:30 right there. This kind of market opens. New York session. All right. And market decided to sell off a little bit. And once it did, we see that it came to this support area, a pre-market support area. We can mark that wick too as a zone if you want, in a 5-minute zone. It came down to the zone. We have a level here. We marked out the previous market low, and it came near it, wick off, showing there is buyer here. Same thing here. There was clearly some buyers here, and candle seems like a strong candle up. Wait for our next candle. We get some a little bit more selling, and then the next candle we got a strong buy, showing buyer really stepped in. They like this price here, and now we see it clear trend back up to our range pretty much, and we try to push up to pre-market high, but fell short, right? So now we're kind of pretty much in a little range. We can see here we're 421 and 225 was our range for the open. Now here's where price action smart money concept comes in, and trend line. Now that we try to reclaim this high, we fail to, we start seeing a chop down. We're making a higher low, right? A low high. And so from there on, you can start building a trend line. Trend line, you can see, you can have trend lines are more effective if there's two to more touch to the trend line, especially wicks, touch, the body, doesn't matter. But you can clearly see a trend line down, right? You want to draw all the way down, extend it, just extend the trend line. Once a trend line extended, there's multiple ways to play trend line, right? So we see trend line down, we wait for pullback, we enter short, right? Once the price come back towards trend line, we short again. It presents an entry point for you to short with the trend. Even though we're in this range, we can see that the low is down here. So entering short here, we see there is some upside towards this range, right? We even lower the zone because we see that from here is where really the push on this portion of the action. So yeah, we could see, okay, I have a short here towards the trend line. I'm possibly taking my profit here, and that would be a good risk to reward ratio. Say you short here, and if you go to a lower time frame, let's say your stop is at the high, right, and you're targeting at least the low, pre-market low, you would have got it. That's at least a 1 to 3 ratio. And if you load in the 1 minute, you can see you can snipe a better entry, but generally 5 minutes is still okay too. But like that, most people like to go to 1 minute so they can snipe entry, and even in 1 minute you can see clear, like, okay, look at all this price action. It's coming to us for a trend line, short, trend line, short, right? That's how people like to play trend line. Now, you know, just remember, every line you see is just a line in short. It doesn't mean nothing. Price does not have to adhere to it, but it's a visual, and it's a visual when price action come towards it based on candlestick behaviors and wicks, that okay, you give you some kind of confirmation and some kind of indication that, hey, those wicks would tell me that shorts are winning or buyers are winning. So we hear trend line short, 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 and then there's another way to play trend line. Smart money is telling you that, hey, shorting right now underneath the trend line is a good idea. Now I took in all the other indicators like VWAP, EMA, and everything else. Reason why? It's too much indicated on, give you mixed signal. Let's say if I put it back on, right? Let's put some of those indicators on that we usually trade, that I usually trade. Then you get what's called that. There's a term for it, but I'm brain freeze right now. I don't understand it. Something over analyst parallelism or something like that. You probably hear it. Love you too, Pop. My son is so sweet. He just came to say he loves me. Okay, back to the chart. So I can think you have too much trend line on. Now your chart just look like shit, and you just like, where do I short? Now I can't really short here. I have a trend line short, but my EMA really hasn't crossed yet. It's a little bit above the VWAP, so and so and so, right? And it's just like, oh, what do I do? So don't do to yourself. Don't do that to yourself. You start to find yourself, discover yourself as a trader, what type of trader you are, what kind of strategy works best for you. The best I can tell you is simplify it. Simplify it. Make it simple for yourself. Be one, don't be all. Be one, don't be all. Sounds like a Star Wars kind of thing, but seriously, be one, don't be all. Trading should be simple. If it's not simple, don't use it. So now I'm strictly just talking smart money and trend line. Okay, so we're seeing a trend lower in this range. In this short range, we see a trend lower for you to take the opportunity to short the market. Let's say you short and you short and you capture this big move. You're winning, right? You're winning after here. You're thinking maybe it didn't bounce, but it never did. It held support. There's no indication of that so far. You're still holding, right? And if you did like a candle by candle stop pattern, stop out. Let's say this is your. Let me do a better example. Okay, let's say you short here. Now you place your stop loss here, right? Candle, keeps doing short. Okay, next candle finished lower. All right, let's say your stop is there now. I don't suggest that because that's a big move, and you want to capture some of your move, protect some of your gains. But if you're taking that risk, okay, you start there. That gives you much more room for not being stopped out. Okay, now in the next candle you see so there, and it came back up here, but your stop is here because we're playing candle by candle, right? You're not stopped out yet. You're waiting still. Let's say now you feel like taking profit here. Go ahead. If not, trail it again, right? You actually would have trailed this candle as your stop, this green candle. And yes, you could have got out here, but like I said, you're playing candle by candle, you stick to the rule. You probably stopped out there because that candle wicked off your last candle stop. So you would have stopped out here, which is fine, right? Which is still a lot of money, but you did miss out on a lot too because you didn't stop out from the low. But that's how it works. Sometimes you feel like you make enough money, you trail tighter and tighter and tighter. You even one suggestion I could say is like, hey, you're in a lot of money, it's moving along. Let's be more a little more uh, conservative. Go at least to 2 minute or 1 minute candle, right? Do 2 minute candle. Okay, all right. I'm gonna start trailing down to 2 minute candle by candle. Then you would stop out there instead, which is actually no, you would have stopped up that yellow candle, which is a lot better, right? Than stop up here. You would have made more, a little bit more money. Now, if you go down to at least to 1 minute candle, you probably will squeeze a little bit more. Yeah, your last candle will be right there, so you see a little more. Get what I'm saying? So, what I suggest is once you're in the 5 minute, you're making that money, you're making that big money, and now you don't want to give up all back the gains. Just go down to a lower time frame, like the 1 minute, 2 minute, and trail those candles. That way, you're really protecting more of that gain. Okay, so with that being said, now you short, you did great, made a lot of money. Now you got stopped out. Okay, cool. What's next? Well, now you wait, right? You wait for the next setup. We'll continue to short or we'll reverse. You got a trend line there. Okay. You know you got stopped out. Price action feels like it doesn't want to short anymore. You mark your level, right? This is your level. This is probably your support. You're like, okay, this possibly support. Signs are showing that there's probably some dip buyer coming in or sell exhaustion. Who knows? We don't know what the case is. Maybe there was news. Maybe the news came out that short the market news came out that rallied the market, or maybe it's a sell the rumor, buy the rumor, sell news kind of thing. You never know. So based on price action that you do see right now, prices started to reverse. All right, and so you're watching this reverse happen, and you haven't taken a trade yet. Okay, you just worry because look at this downtrend. You're like, oh man, that's this. I don't wanna try to jump in because maybe this is just a pullback, at least to the zone here, and short, and maybe it'll short again. You don't know that, right? Because we're looking at chart that already happened. It's easy to say, oh yeah, I'll go long here, right? I'll go long here, but because hindsight, you already seen it actually, right? Now imagine you haven't seen it actually yet. You wouldn't taken it. I actually took long. I actually took long around here. You know, I saw the price action. I liked it, and I long on a Friday. I made almost 2 grand on total 4 accounts. So it was a pretty good day. But I stopped out. I think I stopped out here, or maybe further. I forgot, but I did stop out. I did not get the whole move. I wanted to, but I played it tight. I didn't want it to be too greedy. Anyways, back to this. Okay, we're on the uptrend. We're thinking possibly long now, but we don't want to get hit with a pullback and then short again. So this is where the trend line comes into play. Now you have that trend line. Remember the trend line short? Okay, you're looking at it, see if it breaks the trend line, or does it wick off the trend line and come short again in this zone of interest that we previously had because we saw there were buy here on the zone, right? So we're back at this zone with the trend line. So there's a couple of confluence happening right here. We saw a big candle break off this trend line, right? That's a big candle break, even off the zone, because once the zone was once support became supposed to become resistance now, right? It never did because price broke above it. It became none worse. It became support again almost. So now price action is above this trend line. You're looking at long, right? So where you enter long, you can either go back to the 1 minute to see some clarity as it breaks. Look for some type of pullback into the zone, which we do have, and it looks like it's pulling back and it's held support. So any between here, you can probably go long. You could just pick a long entry there. Let's say you did pull back. You see the price is just consolidating a little bit here in 1 minute. It's holding the support here, and previous support. You want to go long. All right, just go long, and you're gonna target what previous day high. Because we saw that previous high was a good target last time. Based on this, we came at least to here. There you go, at least there, right? Because that was the previous high. And then let's go back to the 5 minute. Now, what's your entry? You sniped on the 1 minute. Now go to 5 minute, and you just Be patient. Watch. Your stop is right underneath this support here. And there you go. You got a trend line break. You see support. We went back to 1 minute and you snipe your entry. And now you just play the game of long. You have a risk at least of 1 or 3, right? So your risk reward is good. You trail candle by candle. That's fine too. Or if not, just play along for the upside. Just some people play candle stop, or some people just like, you know what, this is my target. I got a 1-3 risk ratio reward. I'm just gonna hold until it hits. This is a good indicator to use, right? It's short and long, and you just set it to your risk preference. You set stop. So enter here, you drag your stop loss down here, you take profit up there, right? And you just let it go. Let it go until you hit your profit. You're done. Simple as that. Or you trail up as it goes up, candle with candle, or trend line, or 9 EMA. You can trail by 9 EMA, right? Remember when I told you guys how to trail stop at 9 EMA? You could do that too, right there, 9 EMA. Just trail until the bar closes underneath. That's when you stop. You would have stopped right there. This candle, or actually this candle, it closed right underneath it. The body closed underneath the 9 EMA. So you would have closed there. Not bad, right? Not bad. So there's different ways to take profits. There's different strategies to take profit. Candle with candle, trend by EMA, stuff like that, right? But that's how you play trend line break. You see the uptrend, you're good. You ride it, you took a long there. That's basically price action and smart money concept all in one, right? Finding zone, finding area. This is from here to here. Honestly, I believe they call it a BOS, break of structure, because it's no longer holding this structure and it's extremely short. Same thing. And this small time frame of change of character from here to here is a change of character, right? But you don't need to know all that. If I would have shown you a smart money concept, there'd be a whole lot of things on, like small fair value gap or order block and all this stuff. Like, it's just too much information. You really don't need to know. Break it down so that it is simple for you to understand, right? If you're going to use this method of trading, just price action, zones, levels, and trend line, cool. Keep it like that. Keep trading like that for a month and journal it. Journal it. How well do you do? How well do you perform using just this type of trade style, right? If you do good, keep at it. Keep building at it. You'll be successful. Like I said, a lot of people ask me when I first start, like, what kind of strategy you use? Stuff like that. I was like, I use the orb strategy, and then sometimes I will use trend line. Sometimes I use price action. I always look at price action, but and sometimes I just use simple EMA strategy, right? It depends on what the market gives you, right? And it comes with what you're comfortable with. Lately, I've been comfortable with, been successful with. To be honest with you, it's just my EMA and VWAP strategy. I just keep it simple. For me, that's simple, right? To other people, trend line is simple. There's less of these lines to worry about, right? For me, it's simple to me because I look at it as for clarity. When I can see a price of an EMA cross, give me indication, and I can trail the 9MA as a stop. I look at VWAP to tell me to be long or short, stuff like that. But for you, it could be something else. You could just take all this out and look at it. Look, it's more clarity to you, right? Or just leave VWAP on, right? So you just gotta make it so that you don't have too much directional confluence that go against each other. Like all this indicators telling you to go one way, and the indicator telling you to go the other way, and then you get lost and confused, and you get paralyzed, and you don't know what to do. Right? Keep it simple. When you keep trading simple, you see more progress. Okay. Um, Pretty much that's it for past. So actually, one more thing. So trend line works, like I said, 3 more touches is better. If you want to do a shorter trend line, like a small trend line here, let's say you want to snipe this entry here, right? You want to snipe this move up here instead of that trend line. You missed a lot of the move. You want to probably catch the bottom. Okay, so you kind of see a breakdown here. You kind of see a trend here. Zoom in maybe 3 minute or 2 minute so that you can draw yourself a trend line. Okay, a smaller trend line. Just be careful though. All right, that's right there, right? You got a trend line there, and you gotta mark that. That's maybe that's the top, and then this is the range, the bottom, which I already marked, right? And then now you got clear break. You see a little clear support here, like a double bottom. Okay, you see the little zone here. It came to it, making it act like a little double bottom. You see support, broke the trend line, came back, test that support here, zone. Okay, cool. It wicked up. Hey, I think I'm gonna go long here. So you long. You go long, and you came and you sniped that long. You're like, okay, I'm gonna go long next kind of green, and I'll at least target this high. Bing bang boom, you got it. Only that, you could capture more, but you're on a 1 minute card. You want to snipe the bottom of it. Let's say you got bigger appetite, bigger risk. This is only 1.75 risk reward. This is not great. Actually, no. If I trail up to your stop, it's like below day. It's actually a good risk reward, 1 to 3. Okay. Let's say you want to bang it, you want to catch a big one. Okay, you're gonna try to bring this thing. It's gonna reverse back up to at least pre-market high or pre-market high, pre-market high or opening high. Okay, all right, you did that, and bam, it you got your way, right? You got your way. You still even broke the previous downtrend here that was support for a while. It's supposed to be resistant, but it broke it. And look, bam, worked back up, just went nuts. That's a big move. That's a big move. If you held your whole position, wherever you're in 3, 2, 1, 5, 15, man, you made bank, right? But that's more risk because you're sniping your entry. But like I said, this was probably the top. This could possibly be a pullback, and then it would have been short again. You never know. It's easy to see right now. It's hindsight, but you just have to accept the risk. Okay, the more you trade, the more you see. You have to accept risk. Not every drop like this will have a V-shaped recovery. Sometimes just negative, and then we get a slight pullback, and then sell a step back in again, and just boom, smash it, and you were long, and you will hold long, try to capture something like this to happen again. You have unrealistic expectation instead. Just be aware, that this doesn't always happen. Okay, sometimes news will make it help happen. So pay attention to news. If you hear some crazy good news, yeah, you will see this. But if you don't hear anything and price tags start to do this, just be careful. Okay. Um, and also pay attention to candlestick pattern, right? If you see it start to move, break up here, break this line here, this trend that you see at the top, and you don't see much resistance up it, yeah, you think it could break higher, hold it, right? Because from here, it broke that trend line for resistance, minor resistance. It went back up, traced down, came up. It just played around with it, right? Didn't really scare you off your position yet, because you at the here, you still could have long, you'd be okay, and yeah, you did. Every time it came down to it, wick off of it too, a hard wick, and then bam, it went off. So yeah, that's it. I hope this video helps you guys understand a little bit price action, smart money concept, we want to call it, and trend line, how to play trend line. Catching, sniping entry for bottoms and such, and main importantly, just have your zone, draw your zone. It's very important. Start charting intraday as price action move. It will help you see things clear. Catching bottoms is the same thing as catching tops, right? If you have
see your face with that.
if you draw a trend line up here, right? At least 2, 3 touches, you see it break, right? You could probably snipe a short because look, the price action broken into this trend line, and now you're starting to see choppiness in short. And let's say this was the top, right? And then it can't really copy, but it try, and then but see prices coming down. You have to think, oh, maybe I could short here, and you be short, you probably good. Or the opposite way of doing that, another way of doing that, just drawing a trend like that. Like I said, you're seeing a short pattern forming, comes up to it, short there, right? That's easy to see. Oh, touch it, okay, short, touch, okay, short. Boom. All right, guys, that's it for this lesson. Hope you guys find some value from it. Drop me a subscription. I mean, a sub, like, comments. Doesn't matter. Do have a paid Discord going on. It's in my profile. If you'd like to give me a try, it's a 7-day free trial for now. And you come watch me trade live, and I'll give lessons and stuff like that. I also do option too, and I'll give some option plays, swing plays, my market take, all that stuff. Asian market. I know a lot of people struggle in the Asian session. I've seen the tell you the truth. I've been crushing the Asian session, and I struggled a lot when I first started. I blew so much account, but now it's one of my favorite. Honestly, one of my favorite sessions to trade. Even though it's slow action. My win rate is crazy right now on the Asian session. All right, guys, catch you out next time. Peace.